All right, what is up, traders? Tycoon, super excited for today's video. Let's talk about volatility, right? Where has volatility been in the market? Is volatility about to come back into the market? And is it something we need to be worried about? I'm going to break down the volatility index, the VIX, and actually go over some other volatility indexes that I personally use a little bit more than the VIX, and I'll kind of break down why in today's video. So be sure to smash that like button, subscribe to the channel if you guys are new, and we'll go ahead and get straight into it. We're going to head on over here to TradingView. And so at first here, what we've got is we've got, the VIX on this side, and then we've got the SPY on this side, right? Of course, the VIX is calculated, based off of S&P 500 option contracts. And, you know, as I mentioned, I don't necessarily use the VIX anymore, but I did have someone talk about the VIX in the comment section. And, we'll kind of break down the VIX right now, where it's going. But the VIX has still been, useful, and using the volatility indexes have been useful. Whenever you're seeing these make new lows, that also coincides with us making new highs, right? You can see that the charts are synced up. So you can see the line on this, now I'm pointing here. It's pointing to the same area on the chart before. As soon as we break through these lows, we've already broken through the major level here, which is right around 1530. But as soon as we break through these lows right around the 1250, 1275 area on the VIX, it's very possible that the S&P 500 is going to make new highs, right? And, that's really what I see happening now. We also have a gap up to fill on the SPY, on the S&P 500. You can see right here, we're just now starting to try and fill this gap. I think it's very possible that, we fill this gap up here sometime soon. Now, these gaps, they can act as walls of resistance or support. And in this case, approaching it, it's very possible that this could act as a wall of resistance, right? You can see the red body candlestick here, and we drop down below. But it really wouldn't surprise me for us to, rally up and get that gap fill on the S&P 500 right around 456, potentially even reaching the new highs. Now, we're going to break through and hit those new highs right around 459, 460 on the SPY as soon as VIX breaks below here. It's not going to happen exactly at the same moment, but once we do that, that's when we're going to be looking at potentially creating new highs, right? There's an important level here right around 1177, and then our next level down here is 877. And I personally think that the VIX is going back down to single digits. Okay. If we zoom out here a little bit, okay, and this is a weekly time frame we're looking at with the VIX. The volatility index is back at levels that we haven't seen. We haven't been this low since, basically almost COVID, since before COVID. Was the last time it was this low. And, we're really close to some historic lows, right? We're not exactly there, but, you can see 877 is right around the bottom in 2017 for the VIX. And it basically just broke an important uptrend. I think it's very possible that we come back down to single digits on the VIX, which is going to end up putting the S&P 500 near its all-time highs, if not potentially breaking all-time highs. Now, that's not going to happen very soon, okay? But I do think by 2024, VIX will be in single digits, if not sooner, potentially. Now, that's just my prediction. Now, again, one thing that I like to use more is going to be the VIX 9-day. And this is going to be for intraday. Okay. And the reason being is because ever since the implementation of 0 DTE contracts, like every single day on the S&P 500, as well as QQQ, and they put that on Robinhood, and that happened last year. And that really changed the market up a lot. So, on an intraday basis, what I really like to use is the VIX 9-day. And the reason being is because, it's going to capture all of those 0 DTEs in it, right? It's going to capture all of those weekly contracts. And, you can just, look up some posts about it, do your own research on it. But that's where a large majority of retail and also institutional trading is done these days in the option market, is in these option contracts that often expire in the same day, right? 0 DTEs. And if we were to change our S&P 500 chart here into a 1-hour time frame, just so you guys can see, these coincide pretty well with each other, right? You can see here the VIX 9-day made a bottom, right? And this is right when the S&P 500 started to make a top, okay? And then we pull back here, all right? And you can see the pullback, and then we start to rally again, right? And we start to rally, and then where do we make our new highs? We make our new highs right here on August 24th. And where does the VIX 9-day bottom out? Right here on August 24th. And the big thing is once you see this start to make new lows, that's kind of an inference that, all right, the market is now about to make new highs. It's kind of how I look at this. And on a day-to-day basis, you'll be able to track the movement. You'll be able to see when volatility is picking up. On the 24th here, you can see that there was lots of strength in the VIX 9-day, and it didn't roll over, right? Like oftentimes you'll have days like this where it gaps up, and then what do you see? It starts trending back down. And these are good trading opportunities if you're a day trader or a scalper. You can see the open here, is going to be right here on the SPY chart. And what do? Right? We end up forming a bottom very quickly, right around 10:30 in the market, and 11:30 comes and we rally into, the after hours, right? We rally into the next day. So that's why I like using the VIX 9-day a lot for intraday trading and for, day to day. I definitely use the VIX 9-day a lot more now. I really don't use the VIX much at all. And also, I mentioned the gap up that we had to fill on the SPY on the S&P 500 ETF right over here in this area. Again, taking us up right around that 456 area. But there was 4 gaps down on the VIX 9-day. And seeing these, in the VIX 9-day, it tends to fill these gaps relatively quickly. We just continue to gap up here. You can see this day it gapped up huge and then came back down and filled that gap very quickly. Here it gapped up quick, filled that gap down quickly. So the VIX 9-day gaps, they tend to fill relatively quickly. And being that these are going to capture all of the 0 DTE options and a lot of the short-term and weekly option contracts in there, it's going to help give you a better gauge for some of the short-term price action in the market. Right now, when I want to figure out, is volatility about to come back into the market, and really want to focus on the VIX and volatility, I tend to use the VIX futures, right? And so we'll go back here and put this back on a daily time frame for the S&P 500. But when we take a look at the VIX futures is already breaking down more than the VIX 9-day is, right? And futures are actually live right now. So we are actually seeing this move a little bit here at the moment. But essentially, when we looked at the VIX, it hadn't really broken through its major support level. The VIX futures, meanwhile, have already retested the level 3 times, right? The VIX, we're looking for a potential triple bottom. There's already been a triple bottom here on the VIX futures. And, if we get below this level, then, again, that just reinforces the theory that the S&P 500 could potentially come up and fill that gap or even retest its new highs. Pretty much every time the VIX has been making new lows and coming in and making new lows, that has been coinciding with the S&P 500 making a new high, right? And if we were to zoom out to a weekly time frame, we can see again just how small volatility is in the market right now. From an aspect of how low it is, rather, right? We're up here at a pretty critical level, right around 1415 on the VIX futures. And from there, the next major level is going to be right around 1235. That's where we're paying attention to next, is going to be 1235, 1233. And then we have 1022 after that. And, if we break down to these levels, that's going to coincide and reinforce the theory of the actual VIX index going back down to those single digit levels. Right. I'm not seeing any bullish divergences really here, on a bigger standpoint. We're seeing lower lows here. We're seeing lower lows on the RSI. If we were to zoom in a little bit here, right, and look at this on a more zoomed in scale, we can see that we are building a slight bullish divergence. I'll go ahead and chart that up real quick. But the way to trade divergences that I've explained before is you trade it both ways, right? So, in this case, we're looking to see, is there strength in here? Is this going to, make a lower low and then bounce up? We've basically flatlined here, and price is flatlining, is slightly creating lower lows. But meanwhile, we've seen the RSI actually make higher lows. So, this may lead some people to actually want to go long here, right? But what I'm looking at is I'm actually looking for this divergence to break, right? And once this breaks, that's actually going to be a good trading opportunity for the VIX futures to go actually to the downside, which might coincide with the S&P 500 going to the upside. These are the metrics that I like to look at a lot more now. I've been looking at the VIX 9-day, basically since 2023 started. That's been the main thing I'm using for my day trading and scalping. And then when we want to get a bigger picture of things, we tend to look at the VIX futures, especially in the Discord. Now, if you made it this far in the video already, don't forget to smash that like button and subscribe to the channel. I do want to mention that I have a completely free newsletter for you guys, right? You can sign up using the link in the description or in the comment section down below. This is what one of the articles look like. It's really good information, and not everybody wants to spend all of their time on YouTube. And some people actually still read these days. I know there's reading is a very uncommon thing with America's attention span these days. But if you actually value investment intelligence, and if you guys value free trade ideas as well, I definitely highly recommend signing up for the newsletter. It doesn't cost you anything. It's a great way to support the channel. And there's also a website associated with it, so you can actually go back in the past and read some of the different newsletters that we've already sent out. It's kind of, the website kind of gives it a blog style, so that way you can go back and see, and we post trade ideas in there. Not every single newsletter is going to have trade ideas, but each one is going to be packed with valuable knowledge and just really good content in there that, I'm not really always going to post on YouTube. All right. Now, if you're looking for signs of, the market dropping, in my opinion, what you need to be paying attention to is actually going to be the dollar. Okay. And also treasury yields. That's been a little bit more of a factor, when it comes to dropping the market down and acting a little bit more of the volatility index, right? You can see this period here around July 14th is really when the US dollar bottomed, right? And you can again see this, the charts are synced up here. And the market started to rally continuously while the dollar was rallying here. And then we got to this period here where, the dollar started to, essentially chop and go sideways and digest the move, right? So sometimes the dollar is going to go up while the market is going to go up. But you can see here, we clearly broke out of our inverse bump and run pattern right here and had a strong push to the upside. And that coincided with the dollar, or with the S&P 500 dropping, is really when we started to see the S&P drop as the dollar moved up and pushed higher. Now, we have a very similar chart pattern right here also on the S&P 500, right? You can see that, on a shorter time basis, we had, our downtrend here, and then we had the bump down in price. We broke that trend line, and the inverse bump and run has played out here, right up here, up to the top of the gap fill. So we do need to be cautious, right? If this turns into gap resistance on the S&P 500 and the dollar wants to continue higher and get this 100% retracement back up to the 104.7 area, then it's very possible that the S&P is going to pull back here. Now, if that happens, this is what we're going to look for, right? This is something that you want to pay attention to. Is you want to see maybe an inverse head and shoulders here, right? You have the left shoulder, you have the head, we have our nice smiley face right here. You can draw it like that, or you can draw it like this, however you guys would want to draw it. But we could potentially be setting up for an inverse head and shoulders here. The one thing that I do want to mention is that it seems like everybody now is catching on to seasonality, which is something that I've really been tracking since and paying a lot of attention to really since the October of last year, the midterms, right? And I started paying attention to midterm and pre-election seasonality. But right now, everyone is going bearish for the month of September. I made some videos, that were bearish over the month of September, but really just to go over the seasonality for you guys, so you guys can understand. And, just, mentally know that, hey, September historically is the worst month for the stock market. But, that's just overall given data. When you break down the data and actually look at what September does when August is already a red month, right? And we take a look at August, that's pretty much right when the market topped out, right? This is August 1st right here. SPY is at 456, and, it dropped I had a pretty significant drop, right? It rallied and recovered, but ultimately, the SPY was red for the month of August. Whether it's a huge amount or whether it's a significant amount is not the point, but the point is rather when, the market is already red in August, September. Actually, the odds of September going green, I don't know the exact numbers off top, but it's closer to like 60 or 64%. So, there's a very good potential that a lot of bears could get squeezed out of the market, and this would actually cause a significant rally in September. My personal just guess, right? Because at the end of the day, it's all speculation. Is I think that the S&P 500 is going to go up about 2 to 3% for the month of September, but I do think that it's going to be pretty volatile, right? I think that we're going to have a 1 to 2% drop within the month of September, but overall, it's going to finish, up. I think about 2 to 3%. So, where could that take the market, right? Well, if we just pull out our little measure tool here and take a look at the SPY, 2% up is really going to take us right up here back to those highs, those previous highs that I talked about. And, what you're going to look for there is you're going to look for the dollar to start to fall. You're going to look for the VIX to break out to the downside and start to make new lows. That would coincide with the S&P 500 making new highs. Now to the downside, right? If we get a 2% drop, where's that going to take the S&P? Well, that's going to take it closer to this 440 region. And that's potentially when we could see, we talked about the potential for an inverse head and shoulder, right? Well, a 1% drop right here is going to take us to that right shoulder territory. And then if we were to rally from that area right here, another 2 to 3%, 3% up here is going to take us right back up to the highs, which would actually play out that inverse head and shoulder precisely. So, lots of ifs in this videos, in this video, I try to stay away from those in speculation and just give you guys some data, but I also want you guys to keep an open mind and, know how to look at the market, how to break down the market and see, some of the different things going on. And you want to look for potential patterns, forming, so that way you can be prepared for them, right? It doesn't really do you any good to chart up a chart pattern after the pattern has already happened, right? Like over here, I remember in the Discord, we were talking about a cup and handle right here. If you're talking about the cup and handle after it's already had the breakout to the upside and you're like, oh yeah, look at this cup and handle, it doesn't really do you much good, right? You want to try to prepare for possible scenarios to the upside and to the downside at these given moments, so that way you can capture some of the move, right? I mean, right here, we broke the trend line for the cup and handle, right? And it was a very strong move to the upside afterwards. And, over here, we broke a little bit of a trend line, started to put in, a little bit more of a rounded top. You can see pretty clean, even with that very ugly trend line I just quickly drew, support, resistance. And then we started downtrend here, a little bit of a rounded top up at this area. Those are signs of a topping signal. And we were looking potentially to see, was this going to turn into a head and shoulders, right? That was one chart pattern we talked about before, right in this area right here for our right shoulder. But this is extending a little bit too far high, in my opinion now. And if we get that gap fill, it's definitely going to void out the possibility for a head and shoulders. Another thing, we were potentially looking at was this going to be a cup and handle, right? An inverse cup and handle. We just talked about the bullish cup and handle here. Maybe potentially was that going to be an inverse cup and handle? And again, we've pushed out too high and actually broke through this inverse bump and run pattern that we had here. That's my take on the market for right now. Hopefully you guys enjoyed it. Smash that like button, subscribe to the channel. Let me know what you guys' thoughts are down below, right? Is the VIX actually about to rally? And, are we about to see volatility enter back into the market? And, is this gap fill going to turn to gap resistance and we push down and make new lows soon? I'd love to hear what you guys think.